Let's get to the broader markets right now. That strong jobs report on Friday may not have been all that it was cracked up to be. Our senior economics reporter, Steve Leisman, joins us right now with some new analysis that suggests the Fed may have gotten more of what it was after in the October jobs report. Steve, good morning.
Good morning, Becky. Yeah, and some of it comes from your reporting. Under the hood of the stronger than expected jobs report, several analysts saw a bit of weakness that suggests this may have been the last of the outsized payroll numbers that we get. Here are some of the things that were pointed out. Slowest payroll gains since December 2020. The 3-month annualized wage gains fell to 3.9%, even though we had a rise in the latest months. And there were signs that the key backfilling may be coming to an end. Ian Shepherdson writing, and I quote here, the component of job growth driven by the rehiring of people let go during the pandemic is likely now fading. One example of that, leisure and hospitality. It's been among the leading sectors for job growth, gained only 35,000 jobs. And the CEO of Hyatt told CNBC's Becky Quick on Friday, labor was stabilizing in his industry.
Wage inflation
is coming down, and positions are starting to get filled more quickly. 2 months of data does not a trend make, so we have to be cautious about that. But we could well be headed towards more of something that looks like stability in the labor market instead of this inexorable sort of catch-up game that we were playing before.
To be sure, the sector is still a million short of where it was, and it's unclear if they're going to need to bring all those jobs back. But most forecasters see the job market slowing sharply. In fact, over at Bank of the West, they wrote, we expect U.S. job growth to evaporate completely by the first quarter of next year. A lot has to happen for this nascent weakness to be confirmed. Till now, unemployed workers, we had 300,000 more in the October report. They've quickly been put back to work. Some permanent increase is going to be necessary for the slack to develop the Fed is looking for. Further job cooling and moderating inflation. We'll get a report on Thursday that may let the Fed stop a bit shorter of where markets have now priced in. Becky?
Steve, I'm always impressed by the fact that you're always watching and listening to everything all of these CEOs who come on are talking about. I know that you were trying to get some answers out of Sam Zell. I didn't see the top lines from the control room until after he left, but you were particularly interested in what Sam Zell was telling us about, just in terms of how much he had to pay to get cash, I think, around some of these, they were a minus A rated company, but they were still having to pay up pretty handily in order to secure some capital. And that was something that you were looking for specific terms on.
Yeah, I thought that was fascinating. Look, Becky, despite some of the criticism I get, my head is not entirely in the clouds. What I'm looking for in all cases is whether the theory, which is the ideas that are put forward and followed by the Federal Reserve, are showing up in the real economy. When a guy like Sam Zell, the first thing you heard from Sam, by the way, if you listen carefully, was that it took him some time to negotiate the deal. It means he shopped around. It wasn't clear to me. I could probably give Sam a call and ask him this, whether or not he found some new financiers on this one. Did he use his old folks? But he certainly paid more. That's part of the drag on the economy. And then, of course, the interview that you did on Friday, I'm listening to those guys. Of course, they're the high end, and you always want to be careful not to do too much with anecdote like that. They're probably able to pay more, they both said they had programs to bring in people. You heard the guy from Ryanair said he didn't let his people go. But getting that leisure and hospitality business back where it needs to be, and the kind of interviews that you do with these CEOs, that's key to seeing whether or not the macro concepts are taking place in the real economy. And very, very slowly it's happening. And this idea that we're going to get down to, I keep seeing numbers like 100,000 a month on job growth. That's what I keep seeing, and that's how we would get there.